Yeah, let's continue with 3000 series. So 3400, examination of prospective financial information. Prospective financial information means financial information about the future. And if you recollect, Schedule 2 Part 1 Clause 3, correct? Schedule 2 Part 1 Clause 3. It prohibits a chartered accountant in practice to associate with any financial information that contains projections. You are not permitted to associate yourself with projection. Like, you should not give any opinion on the projection unless the assumptions are clearly stated, unless you mention that you have not verified the accuracy of the information but only verified the assumptions reasonableness. Yes or no? Unless you mention these assumptions in the report that you are giving on prospective financial information, you are treated as guilty of professional misconduct. You are treated as guilty of professional misconduct. We must give clearly the assumptions used. We must clearly mention that financial information we didn't verify accuracy. See, prospective means what? Like, suppose a company prepared next 5 years P&L, next 5 years balance sheet. Comparatively, they prepared 5 years projections, 5 years forecast they prepared. Actually, here prospective information is two kinds. It can be either a forecast or it can be either a projection. Forecast means what? Generally, for short period we can forecast. For longer period we can only project. Forecast is generally based on best estimate assumption. Forecast is based upon best estimate assumption based on the recent analytics, based on the recent past data available. You can forecast next 6 months or next 12 months, but you can't forecast beyond 12 months. Beyond 12 months, if you are forecasting, that's called as a projection, where the assumption is only hypothetical. It is not a best estimate assumption, it's a hypothetical assumption. So, and most of the times, prospective financial information is a combination of forecast and projection. Like, we will give next 5 years financial position, financial performance, where next 1 year is a forecast, remaining 4 years is just a projection. Next 1 year is based upon best accounting, best estimates, best estimate assumptions. Remaining 4 years we projected based upon hypothetical assumptions. Whatever it is, whether it is forecast, whether it is projection, you are not supposed to give an assurance report on that. If at all you give, you are guilty. However, you are not guilty. You clearly mentioned in the report, you didn't verify the information about its accuracy. You mentioned in the report that these information is based upon assumptions. And you mentioned the fact that if assumptions are changed, information will change. If you mention these 3 conditions in the report that you are issuing, then you are not treated as guilty. Correct? Many of us would have signed this projected financial statements for getting bank loans. Projections, yes or no? So, these reports, these points must be mentioned on the assurance report on the projected information. Projected financial information, you should mention this particular information, this particular assumptions. You know what we technically audit here? In this entire 3400, we don't audit the numbers, we audit the assumptions. What we audit? We audit the assumptions as to whether the assumptions are reasonable or not. Whether the assumptions are reasonable or not. Specifically, for hypothetical assumptions, we will have to look at sensitivity analysis performed by the management. For hypothetical assumptions regarding projections, we should ask management whether they considered alternative possibilities also. And in the prospective financial information, especially projections, company must show if the assumption is changed like this, how the picture is going to be. In such a way, the prospective financial information should clearly explain. Then only I will give a report on that. That to what kind of assurance I provide, moderate assurance. What is the level of assurance on prospective financial information? Moderate assurance. When I say I am providing assurance on the information, am I actually giving assurance on the information, or am I giving assurance on the assumptions used to generate this information? Assumptions used to generate this information. On the assumptions, I'm giving an assurance. And since these are assumptions, I cannot give reasonable or high level of assurance. I can only give you a moderate level of assurance. So 3400, the assurance given by the auditor is a moderate assurance. Whereas 3402, assurance on controls at service organization, where the report is used by user auditor of the user entity, the assurance is reasonable assurance. Assurance on pro forma financial information included in prospectus. Assurance on pro forma financial information included in prospectus. There the assurance is again reasonable. There the assurance is again reasonable. There is only one standard where moderate assurance is given, is assurance on prospective financial information. There we give moderate assurance. I told you this point also. What is moderate assurance? What is limited assurance? Both are same. Both are same. If at all you are giving assurance on the actual numbers, but limitedly, that's a limited assurance. If you are giving assurance on assumptions, they are using the word moderate assurance. Technically, what is the difference between limited assurance, moderate assurance? Can we quantify? We cannot. They both are interchangeable words, but since it is standard terminology, let us not interchange. Technically, for me, both are same. In moderate, even in PF, how do we give report? Nothing has come to my attention. Nothing has come to our attention to say that assumptions are not reasonable. We give opinion like this. Nothing has came to our attention to cause us to believe that the assumptions used are not reasonable. In limited assurance review, what we give, nothing has come to our attention to believe that the financial statements are not true and fair. Whereas here, nothing has come to our attention that causes us to believe that the assumptions are not reasonable. Both are same level of assurance. Just that there the word limited is used. Here the word moderate is used. What exactly the difference? If you ask me, they both are one and same. They both are giving only a lower level of assurance. They both are giving lower level of assurance. What lower level? Lesser than reasonable assurance. Any assurance lesser than reasonable assurance is either limited assurance or moderate assurance. That's it. Are you clear? Now, understood this, right? Look at this. Or else, I'll do one thing. Assurance engagement 3400. Illustrative format of unmodified report on a projection. We have examined the projection of so and so for the period so and so. We performed this engagement in accordance with SAE 3400, which is issued by ICI. The preparation and presentation of projection, including the underlying assumptions set out in so and so. Our responsibility is to examine evidence supporting the assumptions. Our responsibility is to not verify the accuracy of the financial information that is about future. No, our responsibility is to verify reasonableness of the assumption. Our responsibility does not include verification of projections. Means whatever numbers they actually shown, right? That is not our responsibility. Our responsibility is assumptions used reasonable or not. Based on these assumptions, numbers generated correctly or not. Whether these numbers are correct or not, I cannot give opinion. Therefore, we do not vouch accuracy of the same. Accuracy of what? Projected number. The projections has been prepared for so and so purpose. Maybe company is going for bank loan, company is going for some merger, some purpose. The projection has been prepared using set of assumptions that includes hypothetical assumptions. Consequently, users are please cautioned. The projection may not be appropriate for any purpose other than the stated purpose as above. Other users don't use this. In our opinion, the projection is properly prepared on the basis of assumptions as set out in so and so. Get it correct? Now you see here, based on our examination, nothing has come to our attention which causes us to believe that the assumptions do not provide a reasonable basis for the projection. This is the actual opinion section. This is the actual opinion. In fact, let me call this as conclusion. Let me call this as conclusion. But you know, the standard uses the word opinion here, so anything you can use. That's not an issue. They are not particular about it. That's it. So, and you know, at the end, we are even mentioning that even if the events anticipated under possession described over occur, whatever events we anticipated, they might occur, but actual results will likely to be different from projection, since other anticipated events may not occur, and the variation is going to be material. You should clearly mention these statements. You should clearly mention the statement that whatever anticipations we told, right, based on assumptions, they will definitely occur, but they will not be real. They will not exactly, like whatever we mentioned, they may not exactly occur. Variation will be there, and the variation is going to be material for sure. Indirectly, what are we telling to the other party? Look, this is a projection. This is based upon so and so assumptions, which include best accounting assumption, hypothetical assumptions, whatever. If at all the assumption is changed a little bit, the information will change. The actual outcome might be different from the projection, whatever we are saying, and for sure there will be a substantial difference between these two. So whether you will believe this or not is your choice. We are giving complete cautions to the users, precautions and all we are telling him at the beginning itself. Clear? Same reporting requirement even for forecast. Same reporting requirement for forecast. Just that here we mentioned that the forecast has been prepared using set of assumptions as set out in so and so, which is a best estimate assumption. Best estimate assumption. Now, so what is a prospective information? Prospective information is information based on assumptions and possible actions by the entity or events that may occur in future. It is highly subjective, requires considerable judgment. It may be a forecast, it may be a projection or a combination. SAE 3400 provides guidance. Their examination of PFI need not necessarily performed by stat auditor, or maybe stat auditor himself can perform, no restriction. This is an assurance engagement, remember. This is not some internal assignment. This is an assurance. Stat auditor also can perform, or others also can perform, anybody can perform. What is a forecast? Assumptions as to future event which management expect to take place, the actions management expect to take place as and when the information is prepared. This is generally based upon best estimate assumption. Best estimate assumption is an assumption that reflects anticipated experience with no provision of risk of adverse deviation. Next 1 year I can expect how the business is going to be, but it will not be completely adverse, a different picture altogether it won't be. Whereas projection, hypothetical assumption will be used. A mixture of best estimate and hypothetical assumption may also be used when we are projecting for more than 1 year. Scope. This standard will not apply. This standard will not apply for narrative terms like that is there in management discussion and analysis in entity's annual report, though many of the procedures outlined may be suitable for such an examination. For example, a company called you, they prepared annual report. Annual report will have so much of other information, right? In the other information, so much of reports are there. Corporate governance report is there, CSR report is there, management discussion and analysis. Inside that, they are talking about future of the company, like how the company sales will increase, how the company profit will increase. Like they're talking about future outlook of the company. On that, you just have to give an opinion whether that is reasonable or not. This standard will not apply. This standard is specifically applicable when a company is preparing separately projected financial statements or projected financial information, prospective financial information with a view to submit to a third party, specific third party, the two. Getting it? Then only the standard will be applicable. And remember, write about nature of assurance regarding prospective. The nature of, first of all, the nature of prospective financial information is what? Speculative. Why? Because the evidence available at the time of historical financial information, the evidence available for historical is very concrete, clear. But for prospective, you will not have any evidence. It is purely based upon assumptions. So which is highly speculative. Means it may happen, may not happen. Therefore, an opinion as to whether results can be achieved or not, you can't express. If the client is asking you, sir, you please give opinion on whether can we achieve the results or not based on your understanding, you should not give. If you give, it's a violation. You should only talk about assumptions reasonable or not, and tell that assumptions might change, tell that the results might change, and change can be substantial. You should always alert the user clearly. You cannot give assurance on the projected financial information. Correct? Whose responsibility? Obviously, management is responsible for identification and disclosure of information. Basis for forecast. What is the basis? Assumptions and underlying assumptions, of course. Why CS are needed? Generally, if some other profession is performing this PFI analysis and giving a report, people may not believe. Since people have a very good understanding of CS or general dealing with accounts, financial statements, all that, if you come and give a report, they will believe. That's the reason why CS are required in evaluating prospective financial information. Varied stakeholders will have a greater reliance on reports, that are signed by chartered accountants. Code of ethics point. You should clearly mention the source of information. You should clearly mention the basis of forecast and assumptions, and a statement that you did not vouch the accuracy of the forecast or accuracy of the projection. If these 3 points, if you clearly mention in the report that you are giving, then you are not held guilty. If at all it appears that you are guaranteeing about the future to the user, you are treated as guilty. The same even applies to projection. In examiner, they'll give you what are the points that a CA in practice must state in his report on the projected prospective financial information, which may be a forecast or projection. What points he must state so that he will not be guilty. Or they may give you write about code of ethics. Write about ethical requirements relating to reporting on prospective financial information and requirements of the code of ethics regarding the same. You just have to give this entire answer. 4 marks question they'll give you. They will put a case study and then they will tell something happened in that case study. You need to mention this provision and say that whatever happened is correct or incorrect. Clear? 3400, remember again and again, you are only doing verification of assumptions. How if the assumptions changes, the position changes? Based on the assumptions, the information prepared is correct or not? Based on the assumptions, are they correct or not? You have to verify. And mention these assumptions in the report, mention the information source, and say that you did not verify accuracy of this information. And what are the duties? What are the duties of a member who is examining PFI? The duty is very simple. The auditor shall obtain evidence regarding what? What are the management best estimate assumptions? And are they not unreasonable? Nothing but are they reasonable or not? You have to verify. And see that prospective information is based on these assumptions only. If at all one of the assumptions is inflation rate, whether the inflation rate is rightly applied for increasing the sale value, selling price, check out. The prospective information is presented in all prospective information is properly presented and all assumptions are disclosed, including clear indication whether they are best estimate or hypothetical. The PFI shall also indicate, the management should explain that what assumptions they use. Are the best assumptions or best estimate or hypothetical? Generally for next 1 year we have best estimate assumptions. For beyond 1 year, the assumptions are by default hypothetical. We can't have a best accounting estimate. And the prospective information is prepared on consistent basis with historical financial information. This is one point which many don't understand again. Like, what is the format of prospective financial information? Same Schedule 3 format. It should be consistent with historical financial information so that in relation to historical, prospective can be compared. Why prospective is prepared? First of all, tell me. To compare it with historical data. To compare with historical data, how the company is going to perform in the future. That is the reason, right? Prospective financial information is prepared to compare it with historical data and decide how the company is going to perform in the future in comparison to its past. So that can I give extra funding to the company or not? As simple as such. So what is the nature of assurance? Prospective information relates to events and actions that have not yet occurred or that might not occur. So evidence available to support assumptions itself is future oriented. The assumption itself is future oriented and highly speculative in nature. Therefore, an opinion as to whether result shown can it be achieved or not, we cannot express. If at all you still ask me what is the nature of assurance, it is only moderate assurance. Its assurance is not about, again, information. Assurance, moderate assurance is only about the assumptions used. You're getting it? Actually, this question is repeated. Above, no, what is the nature of prospective financial information? Is there, right? What is the nature of prospective financial information? The same thing is repeated. It is repeated twice. There it is given as a paragraph. Here it is split into 3 points. Matter will be exactly same if you cross verify. You are getting it. So before you accept this engagement, the auditor will consider the following. What is the purpose of this prospective financial information? Whether information is generally, whether this PFI is available for distribution, nature of assumptions used, elements and period covered by. The auditor should not accept or should withdraw if assumptions are clearly unrealistic and when the auditor believes that PFI will be inappropriate for their intended use. For what purpose management said, for that purpose this is not correct document. If auditor feels this is not a correct assignment, you will withdraw, you will not accept. Or if the assumptions are clearly unreasonable, you will not accept the audit. If at all you accepted, you withdraw from the audit. So how do you examine? When determining nature timing, the following matters: the knowledge obtained in the previous year, previous engagements, management competence, likelihood of material misstatement, the extent to which management judgment is involved, what information they are using, how far it is reliable, industry statistics, stability of the business of the entity, engagement team experience in that industry. All these points we consider in our mind and design our procedures to verify assumptions, procedures to verify prospective financial information. This is actually, this entire 3000 series is self-preparatory. It's not so complicated. This is not so complicated. Even 2000 series also like this only. Because no complication in that to discuss. Much complication is not there. Suppose you see 805, 810. Even 3402, slight amount of discussion can be done. Here, whatever is read here, I should explain the same. I can't even take up any other case. That is also not required basically. So self-explanatory this entire 3000 series. Even 2000 series is also self-explanatory. 2000 series also. 2000 series is lengthy, but it is self-explanatory highly. If at all you are very confident in auditing standards, 2000 series becomes very easy for you. And remember, prospective financial information shall also be prepared on a consistent basis with historical. Means in the historical financials you will disclose all accounting policies, you will mention detailedly the notes, everything. Same way you have to mention here also. How detailed the historical financial information you are presenting, same level of detail PFI also you will present. Just that in PFI the data is assumption oriented, whereas in historical the data is actual. That's the only difference. So when assessing presentation and disclosure of PFI and the assumptions, it needs to be considered whether PFI is informative and not misleading. All the accounting policies are clearly disclosed. Any changes in accounting policies and reasons for change are adequately disclosed. The assumptions, it needs to be clear whether assumptions represent best estimate or hypothetical. When assumptions are made in areas that are material and are subject to high degree, this uncertainty and resulting sensitivity results also should be presented. If at all assumption is high degree of uncertainty is there, if estimation uncertainty for that assumption is very high, sensitivity analysis report also company should present. What does it mean? Suppose they have taken some 4 or 5 assumptions, inflation assumption, customer demand, number of customers that are purchasing, that assumption, market related some assumptions like recession related some discussion going on, that related assumptions. What if some of the factor change, how the PFI can modify, how the PFI will be modified. So sensitivity analysis should also be presented, especially when if there is a high degree of uncertainty. And the date as of which PFI was prepared is disclosed. Management needs to confirm that assumptions are appropriate as of the date. Correct? No? Generally, whenever we are taking any assumptions today about the future, the assumptions have taken today is based upon the information available today. If at all I know next year some other data, some updates might come. So my assumption altogether will be changed in the next year. And finally, report. This itself can be asked as a 4 marks question. You are giving a report on prospective financial information assurance report. What are the disclosures to be made specifically in that report? What are the disclaimers you have to make? Disclaimer means what? Again, disclaimer of opinion, not that. Disclaimer means giving some statements. State that whether assumptions do not provide reasonable basis. Have you got anything has come to your attention that cause you to believe that assumptions are not reasonable? Give an opinion as to whether PFI is properly prepared on the basis of assumption. State that actual results will be different from PFI since anticipated events generally does not occur and variation could be material. The same thing they showed or not in the PFI. Just now we have seen assurance report. In case of a projection, PFI has been prepared using set of assumptions and that include hypothetical assumptions that are not expected to occur. Consequently, readers are cautioned that PFI should not be used for any purpose other than the above. This PFI is prepared to address so and so user. For him only this is useful, not for others. This is prepared based on hypothetical assumptions which may not occur. So that statements and all should be presented in the actual report. That's why you say 3400 report illustration 1, illustration 2, these statements will appear. Suppose, no, finally reporting. If presentation and disclosure is not adequate, presentation and disclosure of what? Assumptions, whatever it is not adequate. You will either give a qualified opinion or adverse opinion. If at all you have to give an adverse opinion, situation comes, you have to withdraw. Suppose assumptions are not reasonable. Assumptions are not reasonable. You give adverse opinion, mention the reasons. You are unable to apply procedures given under this standard. Like you have to verify assumptions, you have to get the data, you have to get the sensitivity analysis report, all that. You need to get that entire data and then only you can talk. That data you are unable to obtain, you cannot give the opinion. Disclaim the opinion, first you withdraw. If withdrawal is not possible, give the disclaimer and documentation. That's it. 3400 is over. See, in 3400, in 3400, 3420 and even 2000 series, I cannot go in depth because the point is you feel like a repetitive from the standards on auditing. Especially 2000 series, you see, except the word audit versus review, except limited assurance, reasonable assurance, everything else is same. I'll tell you, introduction I'll give you for 2000 series, there you will understand. So 2000 series, 3000 series is more of you have to read. It is not that I can explain because complication is not there in this. No complexity at all. Clear? Yes.